Hi, welcome to the overview of the preliminary assignment for undergraduate corporate finance. This is going to be an assignment that you should complete before the class starts in the end of June. Now, this assignment is important to work on because it's going to reinforce many of the learning goals that we're going to learn during the semester, and it's also going to reinforce many of the concepts and subjects that are on the final exam. This preliminary assignment will also give you a perspective of what it's like to be a financial manager, which is very important perspective to have when learning the material of the course. So the material of the course will be so much more powerful if you have experience making decisions that affect the finances of the company. So when I talk about financial ratios or pro forma financial statements or capital budgets, or forecasting in the corporate finance class, you'll have an understanding of what that's like in the real world by running the simulation, which is pretty close to a lot of the top level decisions real world financial managers make. So I find that students who complete this simulation have a much better understanding of the material, enjoy the material more for the class, and find the overall satisfactory of the course higher when they complete this simulation. So I feel it's a very important component, and I'll be referring back to this spreadsheet and this simulation many times within the course to reinforce or use as an example for a lot of the core material in the class. Now, it's a fun simulation to run because you're going to be hired and you're going to be the CFO of an automotive company. And you're going to be running this automotive company for 6 years or 6 periods in the simulation. And once you complete those 6 years, you're going to start to enter that data into a spreadsheet to help analyze your results. And you can enter that data as you're going along at the end of each year of the simulation, which I would recommend, or you can enter it at the end when you finish the simulation. Now, when the simulation should take you about 5 hours or less to complete. Generally, most students spend about 30 to 45 minutes per round on the simulation as you enter your data and you analyze your results. Once you complete the simulation, you're going to enter your data into this financial spreadsheet I created here, and you're going to work on the sales growth, cost of capital, capital budget, industry averages, and charts page. Now, what's great about this spreadsheet, it also reinforces your Excel skills and also gives me an idea of where your Excel skills are, because we're going to be doing a lot of Excel in the class. In fact, it would be a good idea to bring some sort of tablet, or laptop, or device where you can access Excel during the class, because I'll be doing a lot of Excel examples in class. And this preliminary assignment will give you an opportunity to brush up on your Excel skills as well. Now, if you're a student in the summer program, you should have access to the Microsoft Office 365 online, which will get everybody a free version of the current Excel if you don't already have Excel on your Chromebook, laptop, tablet, or whatever device you're working with. So that's really important, because when you go into the business world, much of what you do as an entry-level business person is going to evolve around Excel. So even if you think your major is going to be marketing or management or operations or accounting, you're going to need Excel, so this would be beneficial to you as well. So let's get started with the simulation first. And let me just show you the simulation. So this is, of course, the video you're watching, which is a step-by-step guide to understanding what to do. And you're going to register at Zoom Simulation at www.zoomsim.net. You don't need an activation key or class code. You're just going to register, pay with a credit card, and then click on individual practice. And there's going to be 6 rounds of the practice. So let me just show you the website. Here is the website where you see the zoomsim.net. And what you're going to need to do is click on register. And you're going to click on student registration. So here is a typical registration where you're going to fill out your first name, last name, email address, create a username and password, try to create a username and password that you can easily remember, or write down the username and password somewhere so you have a reference to it so you don't forget. And of course, you have to re-enter the password and click I'm not a robot, and then that will take you to the next step, which is the payment page. So when you get to the payment section, it's going to say something about an activation code. We don't have activation codes for this class. That's something you get when you buy a $200 textbook that is incorporated the simulation within it. So we don't have that. So you're going to click the Buy Now button, and then this will pop up, and you're going to click the Checkout. And then when you click Checkout, you will have the information to... Well, let me just click it and see. So it brings you over to another screen where you have to enter in some contact information, your billing address, and then if you continue the payment method, you will have an option of different payment methods as well. And I didn't enter in. So yeah, so this is pretty standard. I think everybody can do this. So once this is completed, you're going to be sent back to the simulation. So once you finish the payment information, go back to zoom.net, sign in with your username and password, click sign in. So once you sign in, you're going to be faced with two choices. Play individual solo practice or play team competition. Now, we are not playing a team competition because that's something that you would do during the semester. So if I was running this in a semester, I may put people into teams of 4 or 5, and then have everybody compete on a weekly basis against each other's teams. But we're not doing that here. We are just simply doing the solo practice, which means you can work on this simulation by yourself. So you click on the solo practice, and you first come into the first slide, which is sales. So you must decide what type of car you want to make and how you're going to price it and sell it. So let's look at the first car, which is economy class auto. Okay, so before you do this, I recommend going to the student user manual. So if you go to the bottom of any page on the Zoom simulation, let's get to the bottom, you should see these links. So the links are contact support, about Zoom, student manual. So you want to click on the student manual and open that up. Now the student manual is important because it gives you all the details, the background of the simulation, an overview. It talks about how to design and develop each vehicle, what the customer expectation ranges and importance factors are. It talks about how to forecast your sales. It gives you growth rates of the industry for each car class. It gives you a standard growth chart of sales. If all companies were producing the same exact car, this would be the baseline of sales. If you feel your car is better than most, you should definitely forecast higher. If you feel your car is not as attractive, I would forecast lower. So my first year of forecasting, I'm going to stay somewhere close to these numbers, depending on how I build the car. I'm going to try to build a little bit better car, maybe. I'm not sure. We'll see when we put the numbers in. And then it goes into the marketing department and talks about the marketing of the simulation, the effectiveness of different market media, and that what you have to turn into spending money in these areas to advertise your car. It talks about the industry advertising budget expectations, how it's developed. Then production, it talks about how production works on the production page, how research development helps to change and lower the cost of production. And finally, the finance department, how to borrow money, how to retire debt, how to buy back stock, the financial statements, the analyzing the financial ratios, the industry data, charts and graphs. So it's very important to look over and read that student user manual before you start the simulation, or refer back to it as you're working on the simulation. So the first sales, let's see here. So this is what the customers are expecting, a car that has to be between these ranges for each of these areas of the car. So for fuel economy, I'll do 30 because it's really important to the customers that the car are fuel efficient. Now I could go above that. I could go to 31 if I want. But I can't go to 5 or 2 because the car is not going to work. So you do get which is nice. You do get these warnings if you do something really stupid in the simulation that's going to prevent the car from working. Okay, so engine power is not as important, so I can actually go below the customer expectation. So I'm going to fill these in, and then I have to decide on a sales price. So I'm going to put a sales price here, and then a sales forecast. So again, I'm going to go to the student user guide, and I'm going to look at, here is, it says about $21.88, and my car is a little expensive, and I don't really exceed that many customer expectations, so maybe I'll just put it at $2,000 as my estimated sales for that first car. Now the second car, I'm going to put this together too. So maybe I should do closer to 50 here because it's very important, and I can do 25 here because it's not so important. Customers don't care too much about. They're more about for the sedan. They're more interested in the safety features because the sedan's more of a family car, I would guess. Okay. I'll put my price in there, and again, let's see. 2,600 for the sedan. I don't think my sedan is that great, so I'm going to say 2,500. Okay, now the truck. Put my information in for the truck and my sales forecast. Let's see. Okay, 18 and about 17. So I'm going to go 1,700 here. And finally, my luxury car. And it seems like luxury car buyers are most interested in luxury features. So I should try and really surpass the customer expectations on the luxury features and reliability. Now, customers here don't really care about price. And I guess that's because if you are buying a luxury car, you don't want to buy a discounted or cheap luxury car, because I think one of the things about the luxury car, it's a statement of how well you're doing. So I think people, in some classifications, the price of the luxury car is a factor, but it's not as critical as, say, an economy class vehicle. So I'm going to submit that sales data and move into the marketing page. Now this age and income target, you don't have to change these. These are part of, I think, a role-playing game. I was told they don't have an impact on your actual change of sales. So what I'm going to do is, this is the range of expectations of what my competitors will spend for advertising this round. And so this gives me a nice idea of how much total I should spend. And the factor is about 15% of the buying criteria. So I'm going to say, just give me 100,000 here. And I'm just gonna, this is probably not a good strategy, but you should look into the percentages of effectiveness on the student user guide. It will give you an idea of how effective, like I should put more money in television and newspaper. You could probably even make a spreadsheet to put like the total money you want to invest and have it break into dollars automatically to speed this up. But for this particular, I'm just going to put in 100,000 in each category for each car, and just to keep this going. So that's my marketing data, and now I get into production. So in production, I have to see what's my forecast. I need to make 1,900 cars. I only have one factory that can make 1,000 cars. So I'll need to buy one additional factory. I don't want to buy 5 additional factories because that's a waste of capital. I don't need 5 factories. I just need one. So that brings me up to a capacity of 2 factories, which gives me a capacity of 2,000 cars. So now I can build my 1,900. I should never have an excess or shortage different than 0, because there's no reason to build cars I'm not forecasted to sell. Now this operational investments, this is something that you set up, and it gives you, for every level you buy, a $300 cost reduction in the next year of building the car. So that could be very important. Now I'm going to move on to, I need 2 production plants to give me a capacity of 300 So together with my one current plant plus the two new ones, I get a 3,000 capacity, which is going to cost me $20 million. So I need that to build the 2,400 cars. And the operational investments are important because this is in real life what real automotive companies do. They invest in the operations of their business to reduce the costs of building the car so they can maintain their profit margins as customers expect more and more features, safety features, better miles per gallon, better technologies. So if you don't keep up with investing in your company, then you're going to be eclipsed by the other car companies who've made the investments are now and will be reaping the rewards of lower costs in building their car. And they'll be able to satisfy their customers' expectations more by investing in those key criterias. And so I expect that by the end of the simulation, you should have all the way up to level 10 purchased if you can afford it, because that would give you the maximum discount. So if you have 40 levels, and I think 40 levels times 300 is maybe, I'm not sure, that's over $10,000 of cost reductions in the build of your car, so you can really ramp up those profit margins. So that's a critical thing to do. Now, the last page is the finance page. So I'm going to go all the way to the bottom and see I have a $13 million deficit. Now, deficits are not good to have. That is a bad thing for a financial manager to have a deficit. So I'm going to borrow money to make sure that I don't have a deficit and I have a surplus. And now I have a $2 million surplus that maybe I'll move. I'm going to move that up. So I want to have $10 million, at least a $10 million surplus in case I don't sell every car I forecast to sell. I may not have all the profits I'm expecting. So just in case I don't sell everything I've forecasted, I want to have a cushion in a surplus to cover any potential surprise deficits. Okay, so I'm going to complete. Now, when I'm on the finance page, I can go back to sales and change things, back to marketing, to adjust things. I could go back and I could say, okay, just give me one thing here. And if I do change anything, I just have to resubmit that page and it'll recalculate the finance page. So now I'm going to have to enter in my additional funds again because I didn't submit the finance page. So it's going to wipe that out. Okay, so I'm going to submit. And once I submit the finance page, it's going to automatically roll over to round 2. So see this Y2, this is year 2. And I could see that I made 900 points. So that's really good. The first round is the easiest round to make a lot of points. And then after that, you're probably doing well if you can make anywhere from 200 to 400 points a round. 500 a round would be excellent. In some rounds, you're building, so it's harder to make points. In some rounds, you're reaping the rewards of your investments. It's easier to make points. So don't get upset if the round points fluctuate. Now, I could see here through the overview, and the overview is like an analyst review, looking at all my financial ratios. In the course, we're going to be talking about and explaining all these financial ratios. So that's why it's important to do the preliminary assignment, because I'm going to refer back to the simulation and the ratios. And you can use this to kind of understand better what you've done and interpret your results in the simulation. So yeah, I borrowed a lot of money, so my debt ratios are showing negative points. And year over year is a year over year percentile change. So my sales went up about 80% and I earned about 80 points. And my profit margins went up, so I earned by 49%. My net profits went up, my gross profits went up by 27%. So I earned 1 point for every percentage improvement, up to a maximum of 100 points. So here my earnings per share went up 167%, but that I can only earn 100 points as a maximum. Okay, and then we have my forecasts. I improved my forecasts, except for truck and luxury were a little bit lower than 100, but I earned points in all these categories. And I can go to this assessment page, and this assessment page will give me a breakdown in star rating, a score, percentile rank against other players, and a performance, a verbal performance score. Here I did average, and it's going to give me feedback on how to improve. So any place I don't have 5 stars, it can give me some feedback on improving my cash management or my operations. And then I can go to charts and I can look at, say, Let's look at my performance chart. In here, I could see how I did from year 0 to year 1 in all the categories. And what's really important, I think, is this market potential versus actual category, where I could see my potential, what I sold, and my actual potential. So here I am, looks like I'm selling pretty close to the potential on my vehicles. So, okay. So this is important. So if you see a blue bar all the way up here and the yellow down here, it means that you didn't meet your potential, because the blue is the market potential and the yellow is my actual sales. So this is why I did pretty good in my forecasting. Back to the game. And then the industry, this is where I'm going to see information about my company as well as my competitors to get an idea of how I did compared to the computer players. And this is also where I'm going to pull some information from when I do the spreadsheet. So then the financials are backed up here, and then we move back into sales. So now it's year 2. Customer expectations have changed. They've went up. Here are my operational cost reductions from the investments I made in the previous round. So if you see, if I spend $4,000 on my fuel economy, I get a $900 reduction in the total direct cost because of those investments I made last year on the operations page. So that's why they're important. So again, you move into the next round and you complete the data. And I'm seeing here that my profit margin is falling. That's a bad thing. So you want to maintain these profit margins. Okay, so now I'm improving the profit. So profit margins, companies in the real world are expected to improve profit margins every year. And if you don't improve those profit margins, then investors will be unhappy you're with your company, and that will be bad as far as your points. So you want to make sure you're improving your profit margins every year, especially since you're able to do these operational cost reductions, and this should help you to always have higher profit margins. And every company that's traded publicly is looked at as, you know, how they're doing in increasing their profit margins. Okay, oops. So I'm just going to quickly put this data in here, and I'm just kind of throwing numbers in here pretty fast. The one thing I'm trying to do is improve my profit margins. So if I have one area where my profit margin isn't improving, I'm going to make some modifications, because it's very important to, like I said, that's a key to winning the game and doing well, is always improving your profit margins. So here I see that the ranges have gone up. So I'm going to now increase my spending on advertising, because the market has gotten bigger. The expectations for advertising have gone up. So now I'm going to increase my advertising for all the categories. And again, don't do exactly what I'm doing here. I'm just throwing in the same number. You should really analyze and spend more. I'm actually I'm spending too little. So maybe I should up that a bit for some of these categories, just to be within the range of, just in the range here at least. Okay. Now I'm going to submit my marketing data for year 2, and then I'm going to go into, so you see, after you learn how to do the first round, rounds 2 through 6 become a little bit easier, because you're just trying to keep up with the increase. Now, see, I had 4 pieces of inventory left over, so I only need to make 2996 to get to 0. And I only had to buy 1 production plant to meet my forecast. So now I'm going to increase my operational investments, because I want to have even more discounts moving forward. Here I don't need to buy a production plant, because it's going to meet my production meets exactly the capacity I have, so I don't need to buy a production plant. Here, same thing for here. So this could be a sign I'm under forecasting, but I don't need production plants if I have enough capacity. So, but generally as the market ramps up, you'll begin finding yourself buying production plants every round for most vehicles. So I'm just investing more money in, okay, so production is set. And we go to the finance page and I'm going to see I have a nice surplus here. So I'm going to pay down, I'm going to retire some funds since I have a nice surplus. This will help me with some points. And okay, so there are limits as to how much I can retire or how much I can issue, just like in real life. Okay, so $26 million surplus seems pretty good. I'm going to complete year 2. So now year 2 is done. I made 500 points, which is pretty good for year 2. And I was able to increase my profit margins. I was able to increase everything but my equity multiplier, return on equity, and return on equity here, and my return on investment are a little bit lower. And the only area I did bad on forecasting is economy class. So I had earned 100 points for having a surplus and 100 points for increasing my operational investments by 100%. And again, you can review your assessment to see where you're doing well and where you're doing poorly. Review your charts. Look at the industry data, and now you have these tabs here. So as the industry data moves forward, you can easily get the data you need from previous years. So now my year 2 financials are backed up, and now we're going to go into year 3 of marketing. And this is going to be, I'm not going to complete the sim because we're going to move to the spreadsheet next so I can show you how the spreadsheet is done. So before I move to the spreadsheet, just want to go over with it. I completed year 3 when I paused the camera, and year 3 was an example of me not doing so well. I only got 200 points because I ran a deficit, and my profit margins slipped. My profit margins were not improved from year 2 to year 3, so I lost points in my profit margins. And when you lose points in your profit margins, it makes it harder to have a higher score in total asset turnover, equity multiplier, return on equity, earnings per share, return on assets. It makes it more difficult to earn points here because they're all based on profits. So here's an example of a round where I didn't do as well. So in this case, if I go to the assessments, I'll have more opportunities to figure out how to do better. And then the industry now you'll see these 3 yellow tabs here, so I can go between these different years if I need data for the spreadsheet, which we're going to go to next. Now, be careful of this reset your practice game. If, say, you don't want to hit the reset practice game because it's going to erase everything and bring you back to year 1. So you would only do that is if you wanted to run the practice game again for some reason, just for additional practice, or you're just interested in like the game. You can do that, but just bear in mind, if you do hit the reset, you're going to lose year 3, year 2, and could be back to year 1 with all your data erased. So be careful of that reset button. So let's move to the spreadsheet. Here we go. Here's the spreadsheet. And let me put the sim over here. So let's go to the spreadsheet, and then let's give an overview of how to enter in the spreadsheet. So let me just move this up a bit. So financial statement analysis. So there's data filled in here. This is just example data. Now, I'm going to make this bigger. What you have to fill in are these white boxes. So, and there's a note here, look on the financial page of Zoom. You only have to fill in the white cells. So I'm going to go to Zoom financials page. And let me just kind of put that over here. And you see year 0 is already filled in, and everybody has the same year 0, so nothing has to be done for year 0. However, year 1, inputs do need to be made for year 1. So let me just kind of shrink this so we could see. So outstanding shares, if I go down in the equity section here, equity section, outstanding shares. So there's 11 million outstanding shares. So I would update this to 11 million. And then the stock price, Okay, so if I go down here to, let me just squeeze this file a little smaller so you can see things more clearly. So if I go down here to overview, I have earnings per share. Where is stock price? So it looks like for stock price, I have to go to the industry tab. And if I scroll down the industry tab, it will say stock price. And our stock price here is 56.36. So when I type that in here, 56.36. Okay. So I'm going to actually put a little comment in here. I'm going to insert comment. For stock price, see industry data. Oh no, not the industry data. Oh yeah, the industry data. Data tab. Okay, so the industry data tab will have the stock price. Okay. So let's go back and the industry data tab is nice because you can easily switch between years if you need to. So if I want a stock price for year 2, I would click on 2, and then I'd have the new stock price for year 2, which is 33.23. Okay, let's go back to financials. Okay, so now, right, so if I was going to do year 2 stock price, then I just go to the year 2 column, and I think that now I forgot what it was. Oh my God. Speed this up. 33.23. Okay. So let's move back here. So let's just complete year 1 so you get the whole full view of year 1. And so sales here. So you'll see that year 0 is fine. Nobody has to enter anything in year 0. However, year 1 you do have to. I left in data to give you an example, but we have to type in this number here, and then it gives me cost of goods sold. Type in this number here, and then you'll see how the green boxes automatically calculate for you, and you get an error if you try to enter anything into the green boxes because they're a formula. You don't need to enter anything, just the white boxes. So moving down, advertising costs is next one, and then the next white cell is depreciation. Depreciation expense 54, and then we have less interest expense. Interest expense here, and everything. The green cells automatically calculate, and you'll see that you don't need to. And you'll see that they should be the same numbers in the sim. So if you look in the sim, let's see. Pause this. So I'm seeing different numbers than what's in the sim here. So if you look at net profits, it doesn't match up. So as I'm checking my numbers, I didn't enter in the correct depreciation expense. I should be entering in year 1. And I entered in year 0. So this is a good way to kind of double check your entries to make sure what you're doing is correct. And now 61. And then again, I did the same mistake here. I was looking at the wrong column. It's a learning opportunity. Okay, so let's see. Advertising expense, again, I did the wrong column. Should be 2 million, and now the numbers match up. So let me just check the top. Okay, I did the top correct. So let's just say that I did that on purpose for a learning opportunity. But yeah, your total net profits should be equal to the website of the simulation if you enter the data in correctly. But sometimes there can be mistakes. I mean, I created the spreadsheet, so I'm hoping everything's okay, and that's why it's nice to kind of test it out here. So if I move down to the balance sheet, the cash is 25, it's already there. So then the inventory is going to be 2412, 840. And then the fixed assets are the same. And then the accumulated depreciation is the same. So then I get the same result here. I don't have to change anything. Moving into liability and shareholders' equity, I have to put in the short-term debt. And the short-term debt here is going to 13 million. And then I have to do the long-term debt is going to 17 million. And do I match? Yes, it's matching. So going into common stock equity, common stock equity here should be 55. And then the retained earnings, 74, retained earnings. And then does this match? Yes, it matches. Surplus or deficit. Okay, so I do have to enter in the cash surplus. 6703657. Okay, so that is my surplus for year 2. And my investment, once we enter in the investment, in investment R&D. So there's a comment here. If you go any box that has a red corner here, there should be an announcement, and this says you can find on the Excel tab below called R&D Capital Budget. See yellow boxes in the top of page. You'll have to finish this data entry on the R&D page budget first for the number to be correct. Okay, so this is the total money we invested in research and development. So we're going to need to get that number. It says to complete. The tab below, research and development. Okay, so there's a tab here called Capital Budget Research Development. So I think on the industry page, okay, so I believe we have to get this information by completing the R&D capital budget. So we'll go to that. We'll come back to this. So let's move into the sales growth page. So I need to make this bigger so you can see. This is a little too small. I'm gonna have to open up I want this, so it's viewable. Okay, there we go, that's much better. So now for year 1, they want us to enter in our actual sales. And that's the only thing that you need to enter in here is the actual sales. And you'll see that here, if you try to make an entry, you'll get an error. So you only have to enter in here. So let's make, okay, so let's, year 1, where do we get this data from? If we go to the industry data tab, industry data, here is we look down, here's the unit sales for the 4 car classes. Here are the unit sales, 2505, 3000, 2000, 2000. So gonna enter the numbers in here, 2505, 3000, 2000, 2000. And you see, as I enter in the sales for year 1, I'm going to get the variance here is how different am I from the industry average. So here I'm doing 300 cars different from the industry average. So if I want to enter in year 2, I would go and click year Y2 on the industry page, and it'll bring up year 2 data. And then by clicking on the different years, I'm going to get, by clicking on these from previous years, I will get the information of sales from each of the previous years. And you see how the numbers change here as I click on, sales units. It's year 1, year 2. Actually, you know what? I was on looking at this, I was on year 1. I was on year 2 before. So the year 1 sales numbers are different. So let's do this right. This was actually year 2. My mistake. So year 1 is going to be the data from here. 1996, 2498. 1674 and 1604. Okay. And then if I want to go to year 3, click on year 3, and then I get new sales units for year 3. 3395, 4000. And I only completed 3 years so far, so I can only fill in 3 years worth of data. So here I get, so the variances off the averages will calculate. And then you have a couple questions to fill in here just to kind of reinforce, just so I can see what your thoughts are on this. And then moving to cost of capital screen. And we have a box for each round. So for round 1, it says, this number can be found on the Zoom financial page under balance sheet. This is under balance sheet. This is a formula. This is under balance sheet. And this is a formula. Okay. So let's go to Zoom financial page. And we're looking at year 1 here. So I want to get the long-term debt, short-term debt. So let me make this small so you can see both pages here. Okay. So it's said to go to, okay, so we have long-term debt. This is year 0. I need year 1. So we have 17 and 13. 17. I'm just editing the cell. 13. So that gives me 30. Total debt, which gives me 30. And that, there's no total debt here, but that's the total debt. And then stock equity, it says you can find on the financial page and the balance sheet. So total stock equity. Let's see here. Common stock equity would be 55. One more 0. Okay, so my total capital. So this is my total capital pool, and then interest. This number can be found in the Zoom financial page under less interest expense. Okay. So I think that's on income statement. So let's go to income statement. Less, okay, so it's 21, 21. Okay, so this should be formatted as a dollar amount. Oh, it's okay. So so we can see that my cost of capital here has changed. So if I undo this, well, this should change based on, this is a formula that should change as the amount of money I'm borrowing changes. So this cost of capital remains steady. This is the cost of equity. So in the finance class, we'll talk about how this cost of equity is calculated using the capital asset pricing model, and then I'll refer back to the simulation. But this isn't going to change. But what does change is these rates. These are formulas here based on the inputs, and then we have a weight of debt to equity, and that will create our weighted average cost of capital for round 1. And this is also Chapter 9, which we're covering weighted average cost of capital. And then we'll also be covering stock equity and debt equity and the cost of those. So this is all going to be embedded in our class. So if you don't understand what you're doing here right now, that's fine, because we will be covering this in the course. So then, of course, I'd go to the next year cost of capital, and I would do the same thing. I would enter in the long-term debt, short-term debt, which is going to be 8 and 10. So short-term debt, long-term debt would be 10 million. Short-term debt would now be 8 million because I paid some of it down. And then I would enter the new stock equity for year 2, which is 45 million. And we can see that my cost of capital has changed here now to my change of the percentile mix, and the actual weighted return has changed. And I'd go and do the same thing for year 3. So you get the drift, and then it goes all the way. You do this every round for round 6. This is something can easily done at the end of the simulation. So the R&D capital budget. Let's make this big. Okay, so so for round 1. So fill this page. Let me just make this bigger here. Okay. For this page, you only have to fill in our investment R&D, the number of units sold for each car class. Hint, look for the white cells and red triangles. Okay, so here are the white cells I need to fill in. These are all this yellow area is going to be a calculation. So year 1, total operational cost reductions for year 1. Find this data on the Zoom industry page. Look for operational cost reductions. Okay, so let's go to the Zoom industry page. And operational cost reductions are here. And for this is year, I'm going to click back to year 1. So year 1, there are 0 operational cost reductions. And number of units sold for this is the economy class. So the number of units sold was 1996. Okay, so moving into year 2, I see that if I click on year 2, now I have operational cost reduction of 900, and the vehicles are 2505. And then if I move into year 3, so you do this for all 6 years, so I only have 3 years to work with right now. I have cost reductions go to 2400 and vehicles go to 3395, 2400, 3395. So I'd keep doing that. And then the numbers start calculating here, and they start calculating my net present value of my operational investments I'm making. So basically, this capital budget is looking to see, am I getting a return for the investment I'm making in my operations? And this is something we're going to cover in Chapter 10 of the finance textbook when we talk about capital budgeting and net present value. Then I'm going to refer back to these slides and this calculation, and I'm going to actually do this in class to show you how all these numbers are calculating here. So for right now, you just have to enter in the cost reductions and the units of cars sold each round. We're not doing round 0, we're starting at round 1 and going all the way to round 6, and we're going to do that for the economy class, then the truck, and then over to the right here is sedan and luxury. So you can do this for all 4, and we can see here that the investment in R&D, this number here, is for each year we're going to have a number there. And it looks like up here, total operational investments for the entire company from round 1, round 2. So this, if we go back to the financial page here, investments in R&D, this should be pulled from over here. So this should be something that is automatically pulled in from that spreadsheet. So you shouldn't have to fill this in. So I'm gonna highlight this in the green so you know that you don't have to fill this in, and then change the comment, edit comment. This will update based on your inputs on the capital RMD Capital Budget worksheet. Okay. Whoop. Just wanted to resize this. Didn't want to move it so far down. Wow. Okay. All right. Good. So that's done. So that's how so now we have all our data for the financials page, because that's going to automatically update. And what I'm going to do is I'm going to, let's just move over here. And you can see as we move forward, the key financial ratios will automatically calculate based on your inputs. And then your year-over-year points will automatically calculate based on your inputs from the spreadsheet. And it's this will not match the overview page, but just gives you an idea of how these are calculated. So you can kind of see the math behind the simulation as I reverse engineered it. Okay, so we did our sales growth page. Our cost of capital page is done. I showed you how to do the inputs for the capital budget page. Now we move into the industry average. So on this page, this is done at the end of round 6. So at the end of round 6, there's a comment here, you get this data from the industry page, use the data in round 6. So I'm only in round 3 of the industry page. When I get to round 6, I would go to the industry page and I would say, this would be my practice team. So I would input this information here for me, sales dollars. I don't think you can highlight and copy it. Sales dollars, you see how this matches up on all these inputs here. So I'm just trying to input this data from my company in year 6 here. And as I scroll down, computer player 1, computer player 2, their data, you would input their data from computer player 1 and computer player 2. So you'd overwrite the data here. There's only 3 players, and this would give you an industry average for, and then you can kind of see how did your practice game do against the industry. And then the last page, this is going to auto-populate. And you can see here, if I make this bigger, this will you don't have to enter any data in here. It'll auto-populate from your entry screens on the previous pages. And what I want you to do here is I want you to practice making sets of charts. So charts, I want you to make 7 different charts for each of these. So basically what you do for each of them is pretty simple. You just highlight the area, and then in Excel, you would go to charts, and you can insert. I'll just insert a simple chart here, and so it's very easy to do this. But I want you to get you some practice making some charts, and just move them over to the side here and put them down here as you create. And this one says that was for a column. Do a line chart create a line chart for operational net profits. So I'd go here, and then under charts, I would do a line chart and just pop that in. You see, I just want to give you some experience making charts, and just place this chart again on the page somewhere so I can see it when you're done. So this is just a kind of fun chart, making some charts here. No data has to be entered. And that's the full spreadsheet. So now, once the spreadsheet is completed, you want to save your spreadsheet. And I would save along the way as you're going. Keep saving the spreadsheet. And then I want you to submit the spreadsheet for me to review. See on Learn, there will be a link that says Preliminary Assignment, Submit Excel Spreadsheet here. So you're going to click this link. And then when you click this link, there'll be a box. I think you'll have a different view than me, but you'll have a box that will say Upload or Submit File. And then you will click on this link and submit your completed spreadsheet. And when you submit your spreadsheet, save it. When you save the file, put your name in, when you save as, put your name in the file name, or create, better yet, I'll put a place, let's see. Yeah, your name can go here also. So that way I know who you are, and I'll get a good sense of your Excel abilities, and you'll also be able to use this spreadsheet during class, during the semester, because there will be points where I'll ask you to call up the spreadsheet as I'm going over capital budgeting or weighted average cost of capital or analyzing financial ratios or talking about pro forma financial statements. I'll try to reincorporate this preliminary assignment so you can kind of better interpret what you've done here. Okay, thank you for your time. I've taking a lot of extra time here to give you a step-by-step overview of the whole aspect of this preliminary assignment to make it easier for you to complete. I appreciate the time you're putting into this preliminary assignment, and I think you find it very interesting, rewarding, fun, and most importantly, it will really help you do better in the course as far as your comprehension and understanding of the course material. Thank you and take care, and I'll see you in the summer.